Hello there, my friends. Chris Marcus here with you for Arcadia Economics. Welcome back, everybody. An exciting video to kick off the week because today, a question on my mind, especially with some of the recent stories that are out, is wondering whether some of the silver shorts are running for the exits just yet. Certainly, there would be good reason for them to do so, and we'll dig into that. A couple other stories. You're going to be stunned when you see how much metal is at least reportedly going into the silver ETFs, gold ETFs as well. Um, I'll try and be very quiet on this video. We don't want to wake up the Department of Justice when they see how much metal is going in while the price is going down. But don't worry, folks, all covered in tonight's video. So let us dig in and begin. First story here from the Great Gold Antitrust Action Committee, also known as GATA, run by Chris Powell and Bill Murphy. Two great guys I'm big fans of. They were both in the book, The Big Silver Short. And in this post here, if I may skip ahead a little bit to the action where, oh yes, there it is. I keep losing it, but I have no real idea. This is a quote from someone who is a European friend well known to GATA who preferred not to share his name. I take Chris's word for it. Factor that in as you will. Yet, as you see, I've highlighted the key phrase there. But the shenanigans in the last 2 weeks have all the hallmarks of a managed retreat by forces seeking to control the metals price. Well, that sure makes a lot of sense to me. I mean, I've wondered for years at some point, you know, when you have QE going on and debt load's growing, at some point, do the banks give up or does one bank say, gee, this seems like a difficult environment to be short large amounts of gold and silver in and head for the exits? Maybe the first one is the Bank of Nova Scotia, who paid a reported $168 million to get out of their positions. So it caught my eye to see this note from GATA, which also goes into some of the theatrics of last Friday's labor report, which we'll cover. I guess you could consider that labor report accurate if you're also expecting dinosaurs to come out later today, because there were a few whoppers in there that we'll dig into. But again, you know, I just keep thinking back to this story about a week or 11 days old now, but when you had gold trading banks are preparing to significantly reduce their positions on CME's COMEX exchange in New York, which again, just, you know, talked about it. If you watch the interviews with Kranzler and Andy Schechtman, everybody else I've talked to has thought it's kind of odd as well. And in particular, for the reason that traditionally, and in fact, I remember this back at business school, where it's like everybody always wanted to go where the hot market was. So wherever the action is flowing, you know, I guess that would make sense that wherever there's a lot of interest, more money to be made, more opportunity. Yet here, despite a decades-long track record of Wall Street flocking to wherever there's action, that just seems bizarre to me that right now, as the markets for gold and silver have never been more in position to really heat up and create investor interest, and yet the bullion banks are reducing what they're doing, which certainly I would interpret as perhaps another sign that maybe some of these banks, more than one, again, we already have one that exited, and now you see them pulling back. Keep in mind, this is from Reuters, aka a mouthpiece of the banks. I just finished my David Icke book. I forget which banking house owns Reuters, but in either case, you know, is this exactly what's happening? Did they put this out there for a reason? Who knows? But sure seems like a lot of clues stacking up that maybe some of these guys are running for the exits, which, of course, if they do, I don't know who's going to short the metals prices after that. But one reason why perhaps the banks want to head for the exits. Here is our weekly chart, which we've been keeping you updated on every Monday. Another 11.5 million ounces just tossed in, which is going to be even further interesting because, again, along the lines of not waking up the Department of Justice, being too loud, presenting evidence of what they are taking years to discover. I wonder why the price of metal fell last week when here we have 11.5 million ounces added in a week, which is really an almost historic number. Yet we saw the price of silver get pummeled. You can even see it on this gray portion of the chart right here. And I wonder if the Department of Justice finds that unusual. If you heard the call with Andy Schechtman of Miles Franklin, I asked him, is there a lot of people selling their metal? He said no. So I guess that just leaves the COMEX. And it's amazing that despite, by the way, in case anyone's wondering, no, I was never contacted by the CFTC after that Bart Chilton interview. I don't think he was contacted. Ted Butler says he was never contacted. Chris Powell writes to the CFTC regularly, and they do a fantastic job of ignoring him. So, you know, seems like something worth investigating and not exactly rocket science to put it together, although also reminds me of when Harry Markopolos used to regularly report the SEC of Bernie Madoff's scandal and the Ponzi scheme. Was kind enough to do the math, all the charts for him. And what did they do? Just ignore it so it could be made larger, which it appears to be the template here as well, which again is why at least I'm a personal fan of owning silver or gold. I like platinum too. Santa Claus is out there and you want to send Chris some platinum, I'd be cool with that. In the future, I will do a video of why, by some rough estimating, I think it's at least conceivable that platinum could possibly be even more undervalued than silver. We'll see. I'm not sure about that one, and I don't want to be disrespectful to silver, of course, but back to our chart here. Here's an interesting one. So we have 5 blue bars here, a red, that's 6th week, and then another 6 bars of positive additions. So you see over the last 12 weeks, aka 3 months, quite a surge in the amount of metal that has been added in, which depending on when you mark it from, if you want to extrapolate, right to there, then you could even say prices are down over that period. And, again, let's not wake up the regulators because, I mean, if demand is rising while we've seen mines shut down, so demand up, supply down, Department of Justice running investigation, and nothing to see here. But let's take a look. Here's some charts from the last 3 months. You see there was silver close to 18 bucks, got pummeled down to 12, went below 12 at one point, climbed up a bit again, got to 1750-ish, and then over 1830. But again, you can see what happened last week where the price went from 1830 to about 1760. And of course, that was 11.5 million ounces were reportedly added into the trust. Again, you notice I'm saying reportedly. Whether the metal actually goes in there or not is a fair question. Although the way I've always looked at it is that either A, the metal's going in there, which would seemingly be bullish for silver, or B, they're saying the metal went in there and lying about it. And you would think that why else would you be lying? But in any case, I would think that would likely be a net for silver. Here is my head might be covering up. There's the 4-week change. 54 million ounces into SLV, 68.8 total over the last 4 weeks. And let's see here, you see prices up slightly, just a tad. But anyway, again, so if you're seeing ETF demand, Andy Schectman talks plenty about the retail demand. And in terms of the wholesale level, we have Eric Sprott and Andrew Maguire talking about wholesale shortage. So we'll see how that stacks up. Again, I'm not putting a timeline on this yet, but I'm happy I own my July options. And I guess, really the only way to get yourself in trouble is if you start trying to overtime this, which is, of course, exactly what I'm trying to do. Have I seen the smoking gun that I hope I will see when it's a week out or a month out or something like that? No, but again, as someone with a formerly maybe still overly analytical brain, that I've learned to just stop the thinking for a while, do a lot of meditation, and study the science of intuition. And I just find it interesting how a lot of different folks are feeling a similar feeling at the same time, which again is by no means to say that something's going to happen tomorrow, but you look at what's happening politically with some of these events. And I hope I remember. I did watch the George Floyd video, and I will share a comment at the end on that one. But all these different things going on, Fed printing like crazy, and again to see especially when I hear the wholesale shortages, that was really a stunner to me. Then you have the massive amount of gold that's up for delivery. I believe silver delivery starts next month. So a lot stacking up, and I guess we'll just see how that plays out. But interesting to see how much longer this will go on. Oh, yes, the other thing I wanted to mention, I got an email from a reader today that said they can't find silver in London. I did get an email from a reader about 2 weeks ago saying they couldn't find silver from Perth Mint. And the guy today also mentioned that I believe has a family member in South Africa. Couldn't find any silver there either. So I'll see if I can confirm that more thoroughly, interact with those folks. But I mean, it's almost like watching the Harlem Globetrotters against the Washington Generals. I mean, it seems pretty one-sided. Here you see the silver COT report after quite, and look how shocking this is. Banks got really short, and then there goes the price down, and they've been reducing that short position, kind of blowing it out. You see 1, 2, 3, 4, 5 last 5 weeks, open interest down there growing, and see the price is rising again. Will we see the hammer drop? I'm darn curious. I said about a week or two ago to a couple friends, I wonder if they try and smash the price again, if that would be the last time. So they smashed it last week. Was quite a rally today, which we'll get into in a second. Here's the chart from today. Again, just interesting, like that GATA article mentioned. Maybe not have pointed that part out, but a lot of volatility in here. 1770-ish, goes down to 1720, then comes right back up to 1780. And used to be when we would see these charts like that where it comes down, you wouldn't see that part, especially going into late night trading, where it rises right back up again. Seen that a couple times, even during those smashes last week when the price got hammered. There was somewhat of a rebound. Has happened more in the last couple of months. I try not to read too far into the signs, but certainly a lot more volatile, and we'll just see. But we got a couple more. Here is the gold ETFs, another decent sized week, 1.764 million ounces. So you see the blue line there showing a lot of metal, at least allegedly, being added to these ETFs. There's our silver chart, which we just looked at. I'm doing this at 6:07 Denver time. So really that zero down 3 cents um, is really because they started their new trading day. But you see yesterday's open 1740 and silver, let's call it 1775-ish. So up a chunk. We'll see what happens tonight. Like I might be hitting the refresh button on that chart a lot. Here we see the gold chart right underneath the 1700 level. Again, I always find that amusing, seeing the volatility. And then just like hovers right underneath there. Of course, there's a lot of stop orders and different things placed at what they call the handle. So close to breaking above 1700 again, or will the hammer be dropped? We shall see. Again, you would think the price would be going up quite a bit with record amount of contracts standing for delivery. But again, let's not wake up the regulators. Few last stories here. I thought this one was interesting. Trump to pull thousands of U.S. troops from Germany. Move would cut 9,500 American service members from Germany, where 34,500 are permanently assigned. It was just bizarre because I couldn't. When I saw it, I'm like, wow, we have 34,500 troops in Germany who seemingly seems capable of defending themselves. And here as let's check the debt clock. What was it at last time? Does anybody remember? I remember I started looking at it cross 25, and then it kept on going, and I would look, and it'd be like another 100 or 200,000 by the week. I'm going to say across 26. It's been like 2 or 3 weeks. And what do we have here? Oh, I was darn close. 25.9 trillion. And for some reason, we have troops in Germany, which just seems like when we have a lot of issues at home, why do we do that when the government's bankrupt? And the only thing keeping it together at this point is the Fed's hyperinflation campaign. Here's a zero hedge story. This makes no sense. In a month when the US was shut down, the Bureau of Labor Statistics estimated that 345,000 new businesses were formed. If we scroll down here, it looks like that headline might be new jobs rather than actual businesses, but a record 345,000 new jobs were created due to new businesses opening in a month when the US was largely shut down. I kind of gave up looking at any of these BLS numbers about 10 years ago once I started digging into just how ridiculous they were. Kranzler had a great post on Investment Research Dynamics about that. And you can dig into this one if you want. But I think the headline says it all. And I've heard there were a lot of other whoppers in there. So again, if Wall Street, although I don't even know how much it is these days, Wall Street reacting to these things versus Steve Mnuchin reacting to them. Who knows what? How much of the market is the people versus the Fed? Is the Fed 100% of the market? Probably not far off. Although maybe not, because the European Central Bank is fighting for market share. Their European Union plans $2 trillion coronavirus response effort. Goodness. Another 2 trillion here, another currency. Maybe this is the only reason the dollar is still holding up at all. I have one last story here. There was one headline I saw where, I don't know, maybe they're all just ridiculous like this. And the part that's unfortunate is that at least if some of this money were going to the people who could really use it right now. All right, here's a fun game to play. I haven't read this one. Some of these, you just but I wonder how long it takes to get down into the article before we find some bank subsidies, because that's usually what these are. Putting the taxpayers on the hook to repay EU debt issued to fund major spending elsewhere. Geez, just oh, we got a Shinzo Abe quote. Said the total size of its stimulus packages, including some financing aid, doesn't require direct government spending, top $2 trillion, equal to about 40% of Japan's $5 trillion economy. Wow. I mean, you really couldn't make some of this up. Um, but perhaps maybe we'll end it with our sponsor, Miles Franklin. If anybody does want to buy gold or silver, you're welcome to contact Arcadia at milesfranklin.com, where Andy Scheckman of Miles Franklin has agreed to match or beat any online price in the country. So by all means, I'm not telling you what to do, but if you sit here and see some of these oh, and there we go. Some of these stories that are happening and makes you want to buy gold and silver. I'm grateful the guy has set that up. So send any messages to Arcadia at Miles Franklin. And the last thing, I did finally watch the George Floyd video over the weekend. Certainly just tragic and horrific. Although there was something about it that just seemed off to me. I know a lot of people are reporting different things now, but the thing that struck me as odd was that it's unusual that usually when someone kills someone else, they don't stand and do it calmly on camera broadcast for 10 minutes. And that just struck me as odd. And I've been hearing all sorts of other things in the last couple of days that perhaps I'll research further before any comment. So, you know what to make of that. Again, just sending prayers for everyone involved, because it's quite an unfortunate situation, although we'll see how that turns out. Anyways, that is tonight's show. I hope you're having a great week out there. I would like to add that we crossed 15,000 subscribers today, which I do really thank you for. It's exciting to get so many kind messages. A lot of talented people out there in that audience. We met a couple more at our meetup group today, which we finally started back up here in Denver. So would like to say thank you to everyone out there who's been watching and sharing the episodes. Thrilled that you're finding it helpful. And if you are looking for more explanation of why some of these things are happening, well, there's another video coming your way now.